Hello traders, Rich here and welcome to Kucoin as episode 1 on how to draw and trade head and shoulders. So let's get started and as usual, cheers. First, we'll start with what is a head and shoulders pattern, how to spot it, draw it, trade it, and so on. And then we'll go over as many examples as possible. I've got 10 altcoins here that we'll do examples on. You know me, I like practical examples. So let's do it. So what is a head and shoulders pattern? It's basically a market structure 101 pattern. It's a reversal one. So when the price is going up, we'll be looking for a bearish reversal pattern. When the price is going down, we'll be looking for a bullish reversal pattern, also known as an inverse head and shoulders pattern. So what it actually is and why does it work? It's simply, as mentioned previously, a market structure 101 pattern. So when the price would be going up, would have usually higher highs and higher lows, right? So higher highs and higher lows. And we know that the buyers are exhausted when we don't see big impulse movements just like previously. So we have an impulse, price is making a higher high, but not as high as it was pushing previously. That's first. So the impulse movements are getting smaller in size. Second, they are also getting more flat. So steep, flat, flat, and so on. That's first. Second, which is basically the head and shoulders pattern, is when we are in a bullish trend, we'll be making higher highs and higher lows. Then, when the price makes a lower high, it means that the bulls aren't strong enough, as mentioned previously, and couldn't make a higher high. Instead, made a lower high. So, which give us an early alert that we might have a shift in momentum, but doesn't mean that the sellers took over yet. The bulls are still in control. For the sellers to take over to confirm this reversal, we need to see a break below the previous major high, which is basically what you can see it now, right? The head, which is the previous higher high, and then we've got the right shoulder, which is the lower high. And it's called the head and shoulders because just like the human body, you can see that the head, here we go, and the shoulders are here, left shoulder and right shoulder, and vice versa. But now I can't like go, like make myself upside down to show you this example. It's just an inverse head and shoulders pattern. So let's do these examples. Price was going up, big impulse movement, small correction, big impulse movement, small correction, big impulse, small correction. So now we are still in a very strong bullish trend, right? So impulse movements are steep, big in size, pushing higher. However, starting from here, we can see that the impulse is getting smaller. So we can see that this one is smaller than this one, and also smaller than this one, right? So this is an early alert that the bulls are exhausted and couldn't push any higher, but they are still in control because we can still see a higher high, right? And then price made a new high, a higher high also. But we can see that it's almost flat, not going into one direction. It's just going higher, but not as strong as before. So we can see that it's going flat, not just like previously. Look at how steep the movements were. Okay, that's our first alert. And of course, you can also add more confluences or more tools from technical analysis, which we will learn hopefully like during the next episodes. We've got a round number 1, which is also a resistance if you zoom out, but let's not get into it. That's a topic for another episode. For now, let's only focus on head and shoulders patterns. So this is our first alert. Then the price couldn't trade higher and make a higher high, instead made a lower high, which is basically what the head and shoulders pattern. But for the sellers to confirm that they are taking over, we need to see a break below the previous low, major low, which was here when price got stuck inside the range. And you can see many rejections from it, right? So it's a range in the shape of a head and shoulders pattern. And for the bears to take over, we need to see a break below it, a candle close below it, a big one. Then the sellers would confirm that they are finally taking over. We can see many examples previously also. On this one, here we go. We were bullish. Price was making higher highs and higher lows. Here we go. So higher highs, higher lows, higher highs, higher lows. Then couldn't push higher. Instead, made a lower high. So that's a head and shoulders pattern. And the confirmation was after price broke below the previous major low, which is also called the neckline. Okay, so that's how, what do we call it? It's usually horizontal, or that's how I like to approach it. Like some traders would like draw a non-horizontal neckline, which is also known as a trend line. But I always like to go for the horizontal one, which is covering the entire pattern, the entire structure. Okay, so that's called the neckline. And the confirmation would be after a break below it. Now, before I go for the projection for take profit and so on, let's go for the inverse one. So we were bearish, big impulse movements, small corrections, big impulse movements, small corrections. Then the buyers, in this case, the sellers, sorry, couldn't push any lower and make a new lower low. So we're in a bearish trend, impulse, correction, impulse, correction. Now for the bears to remain in control, we need to see a lower low, right? So lower highs, lower lows, lower highs, and so on. However, the bulls kicked in, and it happens to be also around a support area. We'll talk about it later, and made a higher low, which is an early alert that a potential reversal might happen. And it was confirmed after a break, a candle close, a big one above the neckline, which is horizontal, covering the entire structure, which is in this case, this particular one. So that's basically it. For the projection, we always go for, I usually like to go for this one. Where is it? Here we go, price range. But you can also go for this one, which is shift control, or you can simply click on it, measure. Okay, so we measure from the highest point of the head till the neckline, which is around here, and you make a projection for it. But I don't like to use the measure, because if you click now, it disappears. So we go for the price range. That's why you keep it on your chart. So you draw it like this from here till here, and then you drag and drop it, and this would be it. This would be our projection. Vice versa, from the head till the neckline, and then here we go, we've got our projection. So usually price, like a movement of the same size from the head to the neckline, like in the reversal direction, would be expected. So in this case, it's a bullish reversal. In this case, it's a bearish reversal. But it depends on your trading style and your expectations, risk management, and many other stuff. If you would like to close your buy, and of course, it depends if you are trading on margin, spot trading, and so on. Okay, so it depends on you, but this is to focus on the head and shoulders pattern. So we can clearly see that this is it, and price kept trading higher and higher, like almost double the size if you make another projection for it. So it depends on you on when are you planning to close it, when it teaches the projection, when you've got an opposite signal, just like this particular one. So that's basically it, a reversal pattern, a microstructure 101, very basic. Now, if you go for more examples, we can see that currently we've got an inverse head and shoulders pattern forming on GRT. We were overall bearish, big impulse, small correction, big impulse. We can see that the impulse movements are very steep, right? So look at how aggressive it is and getting bigger, which means that the sellers are very strong. They are still in control. The correction movements are usually smaller than the impulse, pushing in the opposite direction of the trend. Next, we see a correction, and look at how flat this one is going. So if you compare it, look at this movement. This was very steep, but this one is flat, right? You can see it visually. You don't need anything to compare it. You can go for tools like the angle and so on, but let's keep it simple, right? So this is it. Next, but however, the sellers are still in control, making lower lows and lower highs. So the sellers are still in control, but we know that they are very, very tired now. But doesn't mean that the bulls are taking over just yet. Let's wait for confirmation. Then we made another lower low. So we are still bearish, lower highs, lower lows. Okay, we are still bearish and we are still pushing lower. However, we can see now that the impulse are getting smaller. So big and steep, still big but flat, now small and flat, which give us an early alert that finally now, by any time, the bulls can kick in. It's not confirmed yet. We always wait for extra confirmation. Trading is reactive, not predictive. So don't try to predict the next move, just like chess. Wait for your opponent, in this case, it's the price or the market, to make the first move and then react accordingly. You can see now the right shoulder is still forming. That's why it's a practical example that we are still waiting for it. And the neckline is where it's covering the entire structure, which is the last major high. So this is our neckline covering the entire structure. And of course, we can add more tools. So if you zoom out, you can see that we've got an aggressive movement upward from here. It's a demand. Don't worry if you don't know about what is a demand. We'll cover it hopefully next. Of course, it depends on your trading style. If you are a swing trader, a scalper, a day trader, and so on. If you're on margin, I personally traded on spot, but you can zoom into lower time frames here because price is retesting the support area to look for basket ups. But for now, let's keep it for the head and shoulders pattern. If we go to link, the exact same movement, right? And yes, before we go to link, we can see that we've got an inverse head and shoulders pattern here, right? Price was trading higher, making higher highs and higher lows, then failed to make a higher high, made, oops, that's it, made a lower high, right? That's our neckline covering the entire structure, broken downward. That's it, a bearish reversal pattern. A bullish reversal pattern is forming now. If you go to link, you can see the exact same movement. Now I'll get like faster and faster because you already got an idea about the pattern. Now it's time for practical examples. So show it to me live, right? It's very easy to pick an example and that's it. But you are not able to find new ones. That's why it's very important, and I like it to be as practical as possible. So low lows, lower highs, big impulse movements, correction, flat impulse movement, and smaller. And here we go. Now we are in this swing. For now, the price, of course, if price reverses from here, we would have a higher low. But the confirmation would be after a break above the neckline, which is covering the entire pattern. On BAT, we can see a very similar scenario, especially for this one. If you zoom out, I don't want to see these ones on weekly, not this one also. Let me clean my chart. Give me a minute. Okay, fantastic. So we are obviously overall bullish trading inside this channel. We'll cover channels hopefully in the next episode. Approaching the lower bound, which is a non-horizontal support. We also got a horizontal support and resistance here, so price can still break it downward and trade higher. That's why we don't buy immediately or blindly. We always look for extra confirmation. That's it, right? So big impulse movement, which is a wedge pattern. After all, we cover it hopefully next. Big impulse movement. Look at how small this one compared to these previous two, right? But they are still pushing lower, making lower lows. So what? Sellers are still in control. Now we've got this impulse, and now we are forming the right shoulder, which you can see very, very clearly, right? So left shoulder, head, and right shoulder. Here as well, you can see left shoulder, head, right shoulder, neckline, break, and trade it higher. Okay, the projection would be like, I'm not going to draw it now because we can't really like it's not activated yet, but for now we can know that this is the distance that the price would probably make after breaking it. I could personally go for like targets above this distance, but again, it depends on trading style. Let's focus on the head and shoulders pattern. So this is basically it. Like, we don't predict that the right shoulder is going to happen now. We always wait for the break. So this is from daily, this is from a long-term perspective. It depends on you. If you are a day trader or want to go for shorter term trades, then you can zoom in here and look for buy stops around the support area. But that is not related to the head and shoulders pattern. Now, let's go for Telcoin. The exact same scenario, a support area and big impulse movements, then going flat, smaller in size, so on, waiting for the right shoulder to form, and then we'll be buying after the trigger above this area. Exact same thing for NWC, for news crypto, bearish movement, big impulse movements, pushing price lower. And as you can see it visually, right? It's very clear it's going flat, right? So this is how we see a shift in momentum bit after bit, right? We can see that it was steep. Now, if you follow the price, we can see that here we go. But that's not, the bulls are not in control yet, waiting for a break above the previous major high. Next, for pork, big impulse movements. We've got a strong demand zone around this area, around 0.1, 0.15. Also bearish, now going flat, right? and waiting for the bulls to take over. And by the way, you can see that we've got Kucoin here on many instruments. That's why we can't really find these ones. We can find it like on one or two exchange, but you can't find it on can't find them on Binance. That's why you see here for Polk and WC and Tel. I go for the Kucoin chart, because when you search, first of all, you see like many exchanges, but like you notice that you can't really find, for example, NWC on any other exchange. You can, but you can't find it on Binance, right? So for those who don't have an account yet, Kucoin is one of the best exchanges in the world, with over 600 billion traded volume on the platform and more than 8 million registered users from more than 207 countries. On Kucoin, as you notice, you can trade a wide range of instruments that aren't available on other exchanges. That's why I personally use it. And for every 4 crypto holders, there is one from Kucoin. And I'm personally also a gold card holder number 370. So I've been using Kucoin for a while now, and I love it. And like this is, in my opinion, like for now, my main exchange. If you don't have an account yet, I add my referral link in the description below, because if you create one through it, you'll benefit from 20% discounts on your trading fees. So that's it for Pork 1 inch, the exact same pattern. We can see that we've got a bearish trend previously, big impulse, small correction, big impulse, and here we go. It's going flat and smaller in size, forming a head and shoulders pattern now, waiting for the neckline break, and that's it. On ICP, the exact same movement. We had a wedge pattern broken upward, a head and shoulders inverse. Like all of these are inverse head and shoulders patterns. On ADA, we can see the exact same movement. I guess that's it. We still have OMG, right? So bearish movements, inverse head and shoulders pattern, OMG, that is it. And we also got a channel here that we will cover hopefully in the next ones. If you go zoom out, you can see that OMG is trading inside this rising broadening wedge. Don't worry about the names for now. It's trading inside these 2 brown trend lines. Let's keep it simple. Approaching the lower bound or lower trend line, acting as a non-horizontal support. If you zoom into lower time frames to look for extra confirmation for buy setups, we look for bullish reversal patterns, because price is clearly going down now. So we can see the shift in momentum is happening, and while waiting for extra confirmation, we have our left shoulder, our head, and now the right shoulder is forming. The confirmation would be after a break above the neckline. So that's it for the head and shoulders, the inverse one and the classic one. Let me know in the comments what you would like me to cover next. It can be a pattern, it can be a rejection zone, like a trend line, support, resistance, supply and demand, or whatever topic you would like me to cover. Best of luck, and I'll see you on the next one.